Buy the retest is where the price action breaks through a trend line that has previously acted as resistance and then retraces to confirm the trend line has now flipped from resistance to support, confirming a support and resistance flip. Entering a trade at this point offers an opportunity to enter with confidence, as buyers typically show up here following the initial breakout. Buying the retest is not foolproof, however, as traders will only show up if the weather in the wider market offers the conditions suitable for buyers to enter. As an example, if the initial breakout of this token or coin was driven by a strong bullish move out of Bitcoin, but then Bitcoin pauses or pulls back, buyers may not show up to buy the retest here, which can then result in what's called a fake out or bull trap, where the price action of a coin or token breaks out of a medium to long-term trend line, offers bullish signals to investors, but fails to confirm the support and resistance flip. So the price action of the coin or token you're looking at falls back down and the trend line continues to act as resistance and the retest fails. Now let's look at one top altcoin pick previously posted on this channel that experienced a failed retest following an initial breakout. And we'll look at the reasons why you should not have entered that trade, at least not yet. This is Cyber, a previous top altcoin pick posted on the 15th of November after its initial breakout of this trend line or confirmation line from this cup and handle reversal pattern. As you can see, following the initial breakout, the price action failed to properly retest this line, failed to properly flip it from resistance to support, and therefore the price action rolled over and came back down underneath the trend line. Let's look for a few clues though as to why this didn't work out. Let's zoom in. The volume upon the initial breakout was not weak, but it certainly wasn't strong. As you can see, it's pretty much on par with other attempts, nothing particularly special. That was our first warning. The second warning is that when we get this retrace after the breakout, the foundation for the bounce is not this trend line, it's actually below it. So the price action comes up, comes back down, but goes right through the trend line and then bounces below it. This is the second warning sign. We then have a second attempt at a breakout, but still the move begins underneath the trend line, so it's not bouncing off this, so it's not properly retesting it, but we put in a lower high this time. That is a third warning sign. Then the price action rolls over, goes straight through the trend line, and then simply puts in a bearish retest, confirming that this trend line, this confirmation line for the cup and handle pattern, is still resistance. So a failed breakout. But let's see if Bitcoin and the weather played a role here. So the attempt at a retest started to occur early evening on Monday the 13th of November. So let's see what Bitcoin was doing. So looking at Bitcoin early evening on November the 13th, what happened at that exact time was Bitcoin broke back down into its pattern, this rising wedge, following a failed attempt at a breakout, essentially a bull trap, which is offering very bearish signals to investors. And as you can see, they were quite right, because the price action comes straight back down, straight through the pattern, back down to this trend line. So because Bitcoin was performing this bearish move at the exact time Cyber was attempting a retest, there was insufficient amount of buyers willing to show up here because the wider market was giving them bearish signals. So buyers again were not prepared to show up because Bitcoin was not giving them sufficient bullish signals. The bull trap and fake out here in Bitcoin's price action spooked buyers, which contributed to the failed retest, the failed support and resistance flip, meaning that you need a combination of a good chart setup with investors paying attention. The volume wasn't particularly great on the initial breakout, and Bitcoin needs to be giving us clear bullish signals for a trade to be successful. But let's take a look at today's winning altcoin pick to remind ourselves what a good retest looks like when Bitcoin does decide to play along. So let's zoom in. So upon the initial breakout of that, firstly, we had strong volume, which shows me that there's a lot of people paying attention to this breakout. And let's just see what Bitcoin was doing at the time of the retest, which was early morning on the 26th of October, to see what signals we were getting. So Bitcoin early morning on 26th of October was just in the process of a bullish run-up, so it was giving investors very strong bullish signals. Certainly much better than when we had this breakdown in the price action when Cyber was retesting. So a marked difference in the weather here than here. And that made all the difference in terms of FET being a successful trade and Cyber not being. And upwards we go. Entering a trade by buying the retest of a trend line after a breakout is overall a good balance between risk and reward. Typically, a lot of buyers show up for the SR flip, for the support and resistance flip, as it acts as bullish confirmation for a trend change. And if you keep your eye on Bitcoin and the wider market, you will learn when and when not to buy the retest or enter a trade. Volume is also a good indicator to use when the price action initially breaks out, as higher volume upon the break of a resistance line will give you a clue as to how many buyers are prepared to show up when the retest does occur. What do you do though if you have entered a trade by attempting to buy the retest and it doesn't confirm and the price action just rolls over? Exactly like we saw with Cyber. For that, you need to have a risk management strategy and a predetermined plan to exit a trade if it doesn't go your way. Which one is the retest? A, B, or C? The answer is B. A is the initial breakout, C is where you wait for a bounce and a higher high to be put in before entering, and B is where you simply attempt to buy the support and resistance flip. In the next video, we will take a look at the basics of risk management when trading. As we covered today, not all trades will go your way, and when they don't, what do you do? Stay tuned for that. Until then.